Hey everyone, these days I have been working really hard. In fact, I'm working harder than I can remember in recent history. I've taken on a lot of work at my real job, and I'm so excited about that because I'm growing my career. And I can do this right now. I have the energy to do this, and so I'm going out there and getting it done. That being said, I have a little bit less time to focus on my investing, and things are really busy right now. And so I want to share my updated look, my updated methodology, if you will, on how I'm personally purchasing dividend-paying stocks in 2023. Because look, I have the energy right now to go out and work actively, but I appreciate my dividend stocks so much because they can work harder than I ever could, and they go out there on my behalf and generate passive income, cash flow in the form of dividend checks that come to me that I can use to pay my bills. And so while I'm working actively right now at a very rapid pace, eventually, my passive income, my dividend checks, they will cover everything. And so I want to share my updated look, my updated scenario here on the whiteboard of how I am deploying money right now in July of 2023 and for the foreseeable future. And so the first thing that happens under number 0, really kind of table stakes, is after I get money. Each week I have money. I have money coming in weekly, and this is investable money, money that I've earmarked for investment. How do I look at this? Well, 0 is I'm really putting that towards emergency fund rebuilding. As some of you know, I'll link to some of the videos in the pinned comment below. I depleted my emergency fund, or our emergency fund, recently for a real estate purchase, and now it's time to rebuild the emergency fund. And so that's kind of table stakes. That's what I do. Really, before anything else, that is top of mind for me. But then after doing that, I've got some money left over to deploy into the stock market, into dividend-paying stocks. And so how do I go about purchasing dividend-paying stocks? Well, I don't have a lot of time. As I mentioned, I'm trying to streamline my life, and any free time that I do have left over, I want to spend it with family. I want to spend it traveling. I want to spend it working out, exercising, doing fun things. And so I don't want to tie up too much mind share with investing. And so if it's really a normal week, after I've rebuilt my emergency fund a little bit, I have more money left to invest. It's really under number 1. If there's nothing crazy happening in the economy or in the stock market that week, I will just go ahead and purchase SCHD. This is the ETF that I'm building right now into 20% of my portfolio. I love SCHD. I did a video on this recently. I'll link to it in the pinned comment. It only has about 30% overlap with my existing positions, and so it gives me instant diversification across many positions I don't already own or I wouldn't ordinarily own. And it has some awesome statistics. As you can see on the screen in front of you right now, this is the Schwab US Dividend Equity ETF, and it has ticker SCHD, and the objective is to track as closely as possible the Dow Jones US Dividend 100 index. Really what this ETF is buying is about 100 different individual stocks. It recalibrates once a year. The starting dividend yield right now, I would say, is about 3.4% if I remember correctly. And the overall PE of those positions on average is about a 14 if I remember correctly. And so this is tracking really value-oriented dividend stocks that also have a history of increasing the dividend pretty rapidly over time. Because as you can see on the screen in front of you right now, what I look at on this screen is the trailing 12 months distributions of $2.60 and change. That gives a starting yield of 3.45%. But over the last 5 years, they've grown the dividend for this ETF on average by 13.9%. So not only does this ETF save me time, not only does this ETF diversify away risk, diversify away single company risk, but it also provides me value. It provides me a good starting yield in qualified dividends. And third, it provides some pretty fabulous dividend growth. And so that's what I do on a normal week if I don't see anything crazy going on in the stock market. But some weeks, some days, there is something that may happen. There might be a catalyst where the overall market plummets, or there might be a catalyst where single positions in my portfolio plummet. And so that's really down here under number 2. If there is something really weird happening with a single position in my portfolio, I do own 37 stocks right now, and that includes SCHD, so 36 individual positions. If I see something really wacky, irrational happening with an individual position, that particular week, instead of just kind of doing status quo, instead of investing in SCHD, I will probably go out and consider purchasing more shares of that particular stock. And so I want to share on the screen in front of you right now Raytheon Technologies. Today, in fact, Raytheon Technologies reported earnings. They were really good. Sales were up 12% across all segments. They tightened their EPS outlook, and they've been buying back a lot of shares. In fact, they grew, this is what I love the most, the adjusted EPS by 11% year over year. And so what is not to like? Everything looks really good, but then again, the stock was down like 12% earlier today. And so I started digging. I'm like, what's going on with this thing? And as you can see on the screen in front of you right now, there was some news about their Pratt and Whitney division on some jet engines that they produced. And basically what they said is unrelated to the company's second quarter earnings results. Pratt and Whitney has determined a rare condition in powder metal used to manufacture certain engine parts, and it's going to require accelerated fleet inspection. It doesn't impact the engines currently being produced, but they're going to have to go ahead and inspect and probably repair a reasonable number of the engines. And I think when I read in another article, it was about 1,200 of their total jet engines. And so I see some news like this. I try, personally speaking, I'm just speaking to my personal journey in the video today. It's not investment advice. I'm just sharing my own journey for fun and entertainment. I already own stocks. I've already done the due diligence. I try not to overthink it too much. And so I see a stock like this that I love, that's a core position. I see value now. The forward PE, not this year, but the following year, is about a 14, which is really low for this stock, especially given their historical track record over the last 3 years of growing the dividend by about 7.5% per year on average, which is right in my sweet spot. I see something like this and I don't need to overthink it. I have an operating methodology now where I just go out and, hey, I'm going to buy more RTX. Now, what happened this week is I already bought SCHD. I already also put some money towards emergency fund. And so I don't have a lot of funds left for this week. This news came out after I already made my trade for the week. That being said, maybe I'll find a little more money to buy some later this week, or I'll just do it next week. And so we shall see. But now I do anticipate not overthinking it. I see one of my core positions down, and I'm just going to buy some more shares. But this is really how I look at things these days, to save myself time and effort. I've already put in the countless hours of analysis. I already know that RTX is a position buy and hold forever for me. I don't need to reanalyze these jet engines. I just know intuitively, instinctively, they will get past this. I also know there's a scarcity of shares outstanding for high quality companies that can produce all of this cash flow to pay back to shareholders as dividends. I know by contrast, there are other resources out there like fiat currency that are not very scarce. And now I need to rebuild my emergency fund with fiat currency. That being said, in terms of my financial picture, our family's financial picture, I always prefer shares and high quality dividend stocks because there's a scarcity to them. And regardless what the fiat currency is of any given country or any given period in the history of humans, these companies can churn out profits and pay out dividend checks. And really that's all there is to it. And so number 3 I list down there is I'm just trying to spend as little time as possible. I'm really tied up right now with some projects. And so I have orchestrated a strategy for myself, personally speaking, that saves me time. Rebuild the emergency fund. If it's a normal week and I don't see anything crazy, I go buy SCHD. Or if it's a weird week and something pops up in my stock quotes and I see one of my favorite stocks like RTX down 12% in a single day, I don't really overthink it. I just buy that instead of SCHD, or maybe in addition if I have a little extra money that week. But usually it's either or, and that's all there is to it. I would love to know what you think about this more simplified, simplistic strategy. As I get older, the only thing that I see in my life is more complexity, less time. Time goes quicker, and so I am trying to streamline everything. If you enjoyed the video today, please go ahead and click the like button. It means the world to me. Also, don't forget to subscribe. I have new videos on the way all the time. Before I go, in terms of full disclosure, I am long SCHD. I am also long Raytheon Technologies, ticker RTX. Before we go today, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market, so please do consult your personal financial advisor before making any money or financial decisions. I'm just sharing my journey for fun and entertainment. I love you all. I'll see you in the comments below, and I'll see you in the next dividend stock investing video.